Hey, what's up? Todd Mackey here. Just wanted to touch base with you guys and share with you a little bit of ideas that I had come across my mind regarding the cryptocurrency markets. Now we see Bitcoin starting to make a resurgence from the lows of around 6,400 earlier this month to currently about 9,500. It was just about to the point where it was either going to go lower for a long time or come back, and surely enough it did come back according to the technical analysts that I listened to on YouTube. There's one called Crypto Investor, another called Tone Vase, another one called Coinmastery.tv, a couple that I subscribe to that kind of get their information from similar sources. I'll tell you another one I watch is Ivan on Tech. I also watch Box Mining and maybe a couple others, but those are generally the research guides that I look to, along with Alessio Rustani, who happens to be an expert chart analyst. The opportunity right now is looking pretty good. It wasn't looking too good earlier this month, but I still expect a little bit of pullback before we hit the 10,000 mark. I'm hoping that we get a pullback at around 9,600 down to at least 8,000, and that's because I just want to buy more. You know, I hate buying when it's going up. I love buying when it's going down. Why? Because I get the best deals. I get the sales. That's where I find myself making the most profits. When it comes to investing, you don't want to buy at the top, you always want to buy at the bottom. And the only way you can ensure that you do that is by buying on a downtrend. In other words, when that market is on a red candle, and you look at the chart and you see red, that's when you want to buy. However, when it goes up and you see green candles, that's not necessarily the right time to buy. It could be a time to sell. It's up to you how to play the market, but that's just the general market analyst take. And all too often, the greater fool's theory is that you buy when it's going up, but in essence, you could be doing yourself a disservice, because if it's already too hot and you don't see any reason for it to come back, and I mean, it could go down and you could lose a good majority of your investment. Now, the use case for Bitcoin is getting so much better because more companies are starting to take notice that the technologies are there to back it up, where it can support a larger number of transactions. The fees are much lower than any other bank could offer in history. For instance, there's a $99 million transaction that took place, and it only cost 40 cents to send $99 million. Talk about low fees. Well, that was Litecoin for you. I still hold a pretty good amount of Litecoin in my portfolio, and actually a majority of my portfolio is indeed Litecoin. As far as the number of coins, the Bitcoin I continue to hold on as the more than 50% stake within my portfolio. I doubt that ever one day I'll go below 50%. I'll always trade with other cryptocurrencies that I find show good potential, as long as I don't have Bitcoin drop below that 50% threshold. It's just a strategy that I've adopted. I've picked coins that are in the top 20. A lot of guys tend to focus on the top 10, but sometimes those that are within the top 20, even the top 50, have a lot of potential, just might not be showing much yet. And what that means is they still have a long way to go before they really have a workable product. Whereas Bitcoin, it's been in existence since 2009, and since 2009 it's shown epic stability, strength, consistency in the way that it works its magic. However, there was a time in 2017 where the transaction fees for Bitcoin jumped all the way to like $50 at some points, and it would take more than 24 hours for that transaction to clear. But the new technologies that are being adopted finally, that have been in existence for a long time, but companies are starting to utilize those, include SegWit, which is segregated witness, as well as the Lightning Network, where you see more and more Lightning nodes popping up everywhere. More businesses will be able to use those, and it'll enable low transaction fees like never seen before, with an increased usage. Now, there's other coins that I would avoid that I'm very skeptical of, and I won't really harp on those. I'll mention one, and that's Bitcoin Cash, also known as Bcash, or BCH would be the ticker symbol. I'm skeptical of that coin because there's a lot of manipulation that is rumored to go about surrounding that coin. I wouldn't really lay hands on it except in very small quantities, no more than $25 buy-ins at a time. And if you wanted to purchase it, you could buy it on Coinbase. There's also another coin that I'm very skeptical of because there's new technologies that are much greater in capacity compared to Ethereum, and that would be like ADA and EOS. EOS happens to be a little bit overhyped at the moment. You see a lot of buy-in and tends to have a little bit of drawback once you have a large amount of buy-in. Whereas ADA coin had a lot of buy-in a few weeks ago, and you're starting to see that drawdown currently. So those would be two competitive platforms to the Ethereum network. Also, Ethereum is a centralized currency, meaning that one man in particular can determine, kind of like Janet Yellen, the whole interest rate, deciding whether or not to add something to it, to take something away from it, to roll back a protocol, or to move it from proof of work to proof of stake. And because of that centralization and the easy manipulation by multiple parties that might get ahead on one person who happens to be called Vitalik Buterin, I would avoid currencies like that because of that centralization feature. And if you move from a proof of work to a proof of stake, the proof of stake coins tend to advantage those that are large coin holders. So if you have a larger stake, you tend to be advantaged a lot at a much greater capacity. With these other platforms competing with Ethereum like EOS and ADA, you don't have as much of a debacle because most of the new protocols that are being intertwined in that new technology are starting to be reduced. So you'll see a lot more equality, decentralization moving forward with similar technologies regarding smart contracts. Going back to the cash, the whole essence of giving money and taking money, you could call those a use token, whereas something like Ethereum I would consider like a security token. Why? Because you have a lot of securities spinning up where with the ERC20 protocol, which is what Ethereum tends to use as a lot of its spin-off coins, there's a lot of manipulation where folks could essentially easily initiate their own coin underneath the smart contract, do a lot of pre-mining, which would give them an unfair advantage, and then distribute that coin out to the public so that they could mine the coin or stake the coin. And it's something that I'd be skeptical of, which is, I guess, why I brought up a few things I'd watch out for with regards to Bcash and Ethereum. Watch out for Litecoin, watch out for Bitcoin, watch out for ADA. Those are my favorites in the next year, and I think that it's going to make some good runs, also some good tumbles, and that's where I'll be buying when you see those tumbles. Thanks for tuning in. Again, my name's Todd Mackey. I appreciate you listening all the way to the end and hearing what I got to say about cryptocurrency. God bless you. Have a great night.